Welcome to today's Daily Market Comment by Rafi Boyajian. I'm Cristina Marujos. Thank you for joining us at XM.com. Markets were in buoyant mood on Thursday as Fed Chairman Jerome Powell gave his strongest indication yet that the Federal Reserve will slash interest rates at the July meeting. On his first day of testimony before Congress, Powell said that since the June meeting, uncertainties continue to weigh the U.S. economic outlook, suggesting that the Fed will make an insurance cut in July. The minute of the June FOMC meeting, published a few hours after Powell's testimony, further reinforced the Fed's dovish tilt. The overall dovish tone of the Fed chief was enough to revive expectations of a sharper 50 basis points rate cut this month. Odds of such a cut surged to more than 25% today from near zero prior to Powell's speech to Congress. The move in Fed funds futures lifted bond prices off their lows following last week's robust jobs report, driving yields back down again and pressuring the dollar. The dollar sell-off came as a relief to the beleaguered euro. The ECB will publish the account of its June policy meeting at 11:30 GMT and could signal that governing council members are moving closer to approving a new stimulus plan. There will be more from Powell later today as he will be testifying before the Senate Banking Committee at 2 o'clock GMT. Although he's unlikely to add anything new to yesterday's remarks, the dollar will likely remain in the spotlight as the latest CPI report is also due out of the U.S. at 12:30 GMT. The Canadian dollar, meanwhile, headed back towards last week's 8-month highs versus the greenback, despite the Bank of Canada sounding concerned about the risks from the global trade tensions. The Bank of Canada also played down the recent improvement in Canada's economy, attributing it to temporary factors. But the somewhat more downbeat than expected tone couldn't outweigh the effects of the looming rate cuts in the U.S., putting the loonie on course to challenge fresh highs in the near term. Thank you for watching the Daily Market Comment at XM.com.